Hello and welcome to Zak's Traders Cafe. Today I'm joined by Steve Deacon, who's head honcho at BizTech Academy. How are you today, Steve?
I'm very good, thank you. Thanks for inviting me to have a conversation.
Well, the reason for the head honcho is obviously your headwear, which I don't actually have anything as stylish as that in my wardrobe. But any rationale behind that, just to get that out of the way?
No, it was. I mean, when I thought about doing a YouTube channel of sorts, it was simply just trying to stand out a little bit different to maybe everybody else. I'm not really a shirt and tie man anymore. Those days are gone. So I just wanted something that you could put on a thumbnail and people could recognize who I am. The response has been interesting. There's been some positives, but there's also been some interesting negatives. But I'll stick with it for now.
Right. So I've just noticed. I mean, this is. I don't want this to be a puff piece, but I noticed your work on YouTube and elsewhere. And obviously, I've been in this business for. Well, not obviously. I've been in this business for at least 25 years. Been in the stock market 35 years, and you kind of get the feeling when you meet somebody whether whether it's up or down. You seem to be somebody who's got a good background in the stock market and great knowledge of the stock market, which is perhaps the most important thing. To my mind, my area or our area is full of cowboys and used car salesmen, but you seem to have a genuine passion for the market and small caps.
Well, I mean, I wouldn't say that I'm necessarily that au fait with everything stock market, but I've got quite a good experience in business. After university and so on, and I have a finance background and a legal background. But after that, I went into industry and I've ran large businesses, not necessarily for myself within the sort of blue chip arena. But I understand a lot of how businesses operate and how success is gained through businesses. So in that context, I think I have a knowledge of where businesses maybe fail or whether they can improve. And that's where I come from to some extent in the videos. But the main motivation behind them is that, in my years of investing or trading in some ways, and it's just a personal capacity, not in a professional capacity, and it's covered, a number of assets, FX, crypto to some extent, as well as the small and mid caps. One of the things I've learned through my own mistakes and errors, if you like, is that a lot of people go into this, especially younger people, and they really do very basic research. And what I wanted to do here is just share some of my experience within business and in the markets, and try and help people with their own research, because there's a lot of danger out there. People can lose a lot of money very quickly. I've done it in the past as well as making money. And the intention behind this is to use some of that experience in business and the markets, just to share that knowledge and help some people if I can.
We were just talking before I pressed record about some of the red flags and the green flags as far as the small cap area are concerned with management. Maybe you could tell us, some of the things that you always look for and some of the things that you don't want to see.
That's a good question. I think I think one of the most important things for me in any manager, to be honest with you, at any level, but obviously more important at a higher level, is transparency. I think what I've experienced in my limited time with a channel, either interviewing individuals or more often than not doing my own research and analysis and then putting a video from there, is that there is a lot of smoke and mirrors out there with some individuals. Now, having operated businesses, having been to to presentations and such like around the market, I know that there is information that is confidential, that is sensitive at the time, and I get that. But I also think there is better ways of managing some of the communications, and I think that there are a lot of people out there that maybe don't communicate as well as they could, or certainly don't cover the tracks maybe as well as they should. So I think that the lack of transparency is something that is a red flag for me, and obviously more transparency is a green flag. And I think it's just, again, the other thing is just walking the talk. People commit to things in RNSs, in communications, in presentations, in AGMs, and then they fall back. It can be weeks, literally only weeks, and sometimes even days after the communication, you find that there was a contradiction. And to me, everybody's allowed to make a mistake, but maybe only once. If it happens again and you start to see a pattern incoming, then there's a lack of trust. And if there's a lack of trust, then why would you invest? I mean, that's some of the things that I sort of look at when I look at people, interview people, and do the research myself.
Well, I'd maybe putting the case for the defence. I'm not sure whether I should be, but there are issues with the small cap area at the moment. it's probably one of the worst periods in the small cap area in living memory. It reminds me of when I started looking at the market in 73, when I was about 7. So that was one thing. We're just going into that nightmare of, almost there's a lot of things which are very similar to 1973. The other time, which is also, we've got the greatest hits of all the bad times, actually, in a way at the moment. So 1973, maybe 88, 89, or the early 90s when interest rates were 10% plus. And that was sort of towards the end of that particular conservative period. And then, you've got the little bits of the dot-com bust and also the GFC. So it really is you've got everything in there. The worst thing for companies is that you can't raise a bean at the moment, even whether it's a good company or not. There's just people are rather than putting money into shares, they're buying eggs and paying their mortgage. I mean, why would anybody do that? But that's what they seem to be doing. And even when there's good news, it's seen as an opportunity to get out rather than to get in. Which is there's no forward-looking aspect at all. So, if you're on the CEO side, you are looking at a very difficult situation. And then plus, if you add in all the regulatory changes that have been made in the last 2 or 3 years, with increasing the market cap on AIM and the standard list, and then all the extra costs of auditors and lawyers and the Nomad, all this sort of stuff like that. Seems to be the whole table is tilted against the small cap company or the growth company, and therefore, unless you've really been around the block and you've seen it before, and and you've got a very strong network of liquidity providers and very loyal shareholders, it's a tough gig at the moment.
Yeah, I fully agree, but what I'd also say, on the other side of the coin, that the individuals that you're talking about, the CEOs of these companies, whether they're small cap, mid cap, or big companies, they're paid the bucks to manage that situation, right? And that's the bottom line. I mean, maybe I'm a little bit too ruthless in my view on this, and maybe one of the downsides of my career maybe been that. But I don't suffer fools gladly, and I think that these CEOs are in a CEO in that position to be accountable, to be responsible, and to manage anything that's thrown at them, whether it's a regulation change or something micro, within internal to the business. So in many ways they do have to stand up. That's certainly my view on this.
And do you think, well, then it comes down to the type of people who get into this area, in the small cap area, the lower end of the market? They're not normally people who are CEO of Unilever. They're people who maybe have some history in business, but not an extended one. And they might have maybe a speciality in a certain sector, and then that company lists. So the public market and the being a private company in the public market, it's going from A levels to a master's degree in terms of that. And where are you going to learn those skills? Communicating with the market. Obviously we both interview lots of CEOs, and you would say probably 1 or 2 out of 10 actually are any good at getting their message across. Most of the service providers that they have don't have any either knowledge or interest in the stock market, so they can't sort of say, well, Fred, what should we say in this announcement? What should we do in that? So it is a little bit, the backbone of this is a little bit soft, let's say.
Yeah, but that sort of comes down. I go sort of full circle a little bit to what I said a moment ago. That's why I think it's important that people like yourself, people like myself, and others in this particular area. And I know you mentioned that it's quite a rogues gallery in this particular field that we operate in at the moment. But I think there's an onus on the likes of us, if we want to make this a vocation or even a job in our own rights, to question these CEOs and to disprove or prove their credibility in those particular roles. Not because you're trying to find them out or catch them out or even or anything personal. You're trying to support the investor base. It's, my raison d'etre, if you like, is to try and support the retail investors out there with some form of research to make an educated investment decision. Now, I can't say that my opinion on CEO X or CEO Y is wrong or right. All I can judge is on my own experience and my own knowledge of dealing with people through the 54 years that I've had on this earth. My And I hope that some of that is correct, and some of that can be imparted to individuals, other individuals that are in this particular area. And from there, they can put that into hopefully all that other research that they're doing that is not Steve and the BizTech Academy, but maybe yourself or whoever, and make an educated decision. And then they can then filter some of that inexperience or that learning that the CEOs are potentially going to go through as they come through the startup into whatever level, or if they come from a different area. That's the sort of angle that I look at it. I hope that makes sense.
I think it makes sense. It might make too much sense for the Wild West that we're in at the moment. But I mean, I think there are some examples. There's some examples I think recently. I mean, there haven't been very many wins for retail investors or the punters so far this year. There've been some quite painful situations as well. I think maybe the best one in the recent past has been Upland, where I think everyone and their mother was in the stock from 0.7, 0.8p, etc. They went up to 2, 3p, and then this week the company said that we've had a bid at 14p, which was obviously whoever was looking at the company was feeling very generous that day. So that was a big win for retail investors. It was great on a charting perspective. I think most of the sort of the info about the company suggested that it was, either, it was good value or too cheap, or there was something good going to happen. So the trail there of, oh, what shall I buy this summer worked very well. But sometimes, there's another company where, Rio Tinto took a stake in it. I think they put in $40 million, and the shares are actually lower than when Rio turned up. And so you sort of scratch your head and say, well, that was flagged as being a very good company. The company was very good at communicating the message, and the shares have gone down from 28p to 21p. Like, what is going on? So the market is a strange place as well. And so you could say, and I could say, well, that company, which won't mention because that'd be rude. It should be much higher, and we can be doing that to a blue in the face, not giving investment advice or anything else, but just saying, look, the shares are trading lower than when Rio came in. So that for me, I just don't understand that at all. That's after the 35 years of looking at the market day in, day out. So I think that there is an issue in terms of getting the information out there and saying what should happen, and then probably leaving it to the market or leaving it to investors to decide. But I think the problem you see over the years is that some people say, right, that stock, the Rio are in there, it should be £1 a share, not 20p a share. And anybody who disagrees with me is an idiot. That you tend to get that kind of thing, that the commentator knows best, and it becomes like King Canute. That stock's fantastic, and you see a lot of that. I think it's up to you or me or whoever to then say, well, actually, we're in a bear market, and a lot of people thought this company was great, but they can't wait, and they don't have the liquidity to hold their position, for instance.
I think you're right, and I think that there's a big challenge also with the time scale that these conversations relate to. There's you look at the social media chats and such like. Everybody is talking about what's happening in the next hour. Or the share price has just gone down. Oh no, what's going to happen? You're right. We're in a bear market. We are in a situation where there's no liquidity. You look at the AIM performance in the last sort of 3 months or so. I think it's down, I don't know, 30% or something. A lot more than some of the other indices, and it's not a good place to be at the moment. But arguably that's a great time to buy, and all those sort of cliches that you get. But the point that I try and look at is look at the company's fundamentals as a whole, and try and gauge when the market is going to turn, because the market is going to turn. Interest rates are going to slow down if they've not already stopped in the US. We shall see. The differentials between the US and others will change. The dollar will probably drop down a little bit, and as we go through, hopefully next year and into 225, the market will change and we'll start to turn a corner. And the question that I sort of ask myself, and what I try and sort of look at when I'm looking at some of these companies, is, will this company survive through that period, and is it something that is going to be good through that period, not through the next hour or the next day or even the next quarter necessarily. It's I'm not trying to look at this from a trading point of view. I'm trying to look at it from an investment point of view, and that's the big difference. I think a lot of people I don't think they get confused about trading in investors. I think a lot of people use the phrase investing when they're really traders because they don't want to admit that they're actually gamblers, right? Because that's what they are. And I think it's important. And again, I go back to what I said a moment ago. The onus, and I think there's a responsibility on people that are in the when I say the public eye, I sound like I'm going to be like a celebrity of sorts, and I don't mean that to be the case. But when you are in the public eye and you're conveying an opinion, then I think it's important that you have a responsibility to be as honest and truthful and transparent and open as you can be. It may be very different to the Wild West that you allude to, but that doesn't mean that my integrity and my values are going to change. Right? I think it's important that we convey that and we try and help people, guide them through the longer term, and that's the goal here.
It must be. I don't think there are many people with your kind of mindset. So
Maybe I'm just idealistic, maybe.
Right. So in terms, you've started recently. What can we expect from what you're going to be doing, and it is very, very new. I mean, I think you're aware that I'm based in Singapore. I've been out here on and off for a while. But the last time I came here was June last year. My wife is here. I live with my Singaporean wife, and it was only maybe 6 months ago that I finally got my residency here and therefore was able to work and so on. So in the meantime, I've been deciding what to do, and I don't really want to go back to sort of corporate life. I could, I suppose, if I wanted to, but I don't really want to take that step again. So I've decided to try and set this channel up and just play around. I started off, to be honest with you, in May time of this year, doing some basic Excel stuff. It was just the easiest way to learn how to do videos, if you like. And then someone pointed out Premier African Minerals to me as a potential investment. I've been looking more at sort of, like I said, FX and crypto more than the smaller mid cap stuff. And I watched a few videos on it, and I thought I could potentially do a video like this and probably a little bit better than the ones I was sort of seeing. So I did one, and very quickly I got some subscribers and I got some followers and I got some questions and so on, and it's quite motivating. So I continued doing this, and this was only in July. And from there, I've started doing some interviews, as I've mentioned before, and as you've mentioned. And I think the goal now is to probably expand this and to start to do some sort of regular client reviews, whether they be RNSs or interviews, longer term interviews and such like, and collaborations with other parties. I know that we've talked about potentially doing some sort of discussions together with CEOs. I think that will be a good thing as well, just to bring that different dynamic into the discussion. So ultimately, I think I'm going to take this and stick with this and try and expand it into more of a sort of media service, if you like, maybe to the smaller mid-cap companies out there, and hopefully not just the UK. Hopefully a little bit more potentially stateside and possibly Asia, although I think it's slightly a bit different over here. But that's ultimately the goal. So really just looking a quarter ahead. So by the end of this quarter, I want to have the website and everything up and running, certainly a lot more interviews done, and then start offering or being able to offer a more of a professional service than the sort of real startup that I'm doing at the moment. So hopefully a bit much of the same through Q4 this year, and then more of a step into the sort of professional arena as I go into 2024. But the idea is to help the retail investor.
It is primarily focused on. It's primarily focused on two angles, if you like, but the ultimate goal is the same. It's getting an honest and transparent message out from the client base, the company base, if you like. Whether it's a good or bad message, it doesn't matter, as long as it's an honest and a transparent message. And then trying to have that message conveyed in such a way that it is understandable and is and it sinks in with anybody who's interested in that particular company from an investment standpoint, whatever their background or knowledge is, whether they're a senior accountant or previous CEO, or whether they're a chef or whatever the case may be, with limited financial knowledge. The idea is to try and be that conduit, if you like, between the messaging from the company itself to the investor base, which primarily in this particular world we're operating today is the retail investor base.
Well, Steve, it's been a delight to speak. I hope you do well in your endeavors, because it'll be good for the retail investor, and hopefully we'll speak soon.
Thanks, Zach. Thanks for your time. I appreciate it.